Hello students, we are studying about leave encashment under section 10 subsection 10AA under tax free incomes. As per that, leave encashment while in service is fully taxable as income of previous year in which it is encashed whether an SC is government employee or non-government employee. But leave encashment on retirement of an individual is partially exempted from tax if he is non-government employee, and if he is a government employee it is fully exempted from tax. We solved some problems relating to that. As per that, there are some conditions to calculate taxable leave encashment, that is, to calculate taxable leave salary from actual amount received on leave encashment, we have to deduct least of the following four things, that is, actual amount of leave encashment received or approved period of earned leave to his account into average monthly salary or 10 months into average monthly salary or maximum limit of 3 lakhs. When you deduct least of the following from the actual amount received on leave encashment, you get the taxable leave encashment. Let us solve two more problems in this session. See this problem. Mr. Narayan, resident, was a manager in a private company. He sought premature retirement from his service on 1st November 2019 after completing 25 years of service. His salary for 10 months preceding retirement was 36,900. He had 7 months leave to his credit on the basis of 30 days per year, which was approved, and he was paid rupees 27,300 as salary. Compute the amount of encashment exempt from tax for previous year 2019-20 if his last drawn salary is rupees 3,900. All information relating to computation of taxable leave encashment is given in this problem. See the problem. Mr. Narayan was a manager in a private company, sought premature retirement. He is getting retirement from his service on 1st November 2019 after 25 years of service. Okay. His 10 months salary, that is average salary, is given, that is 36,900 rupees. That is 10 months average salary. You have to calculate monthly salary on the basis of this average salary. When you calculate that, you get 3,690 as his monthly average salary. Okay. Next, he had 7 months leave in his hand, that is earned leave he had 7 months as 30 days per year. That means, as per the rule, 30 days of earned leave must be given to the employee per annum, and that amounts to rupees 27,300 as salary. This 27,300 is the actual amount received on leave encashment. From this, you have to deduct the least of four things. Compute the amount of encashment exempt from tax for previous year 2019-20 if his last drawn salary is 3,900. This last drawn salary is not of our use. We should not consider this 3,900. We should consider average monthly salary, that is 10 months average salary, that is 3,690 rupees. This amount we have to consider. And here they asked you to calculate exempt, that is amount of encashment exempt from tax. But let us solve the full problem, that is a taxable leave salary, for your understanding. See the note, average monthly salary is equal to 36,900 divided by 10, that is 3690 as I explained. See the computation of taxable leave encashment format we already discussed in the previous session. A particulars column and two amounts column you have to draw. Amount received on encashment 27,300 given in the problem. From this we have to deduct list of the following things, that is exempt under section 10 subsection 10 AA. Which are the things? First one, actual amount of leave encashment received 27,300 or 10 months salary already given in the problem 36,900, or amount of salary for approved period of leave. In this problem approved period of leave is 7 months, that is his approved period of leave that can be encashed 7 months, and 10 months average salary, that is monthly average salary amounts to rupees 3,690, that amounts to rupees 25,830. Statutory limit is 3 lakh. So, least of the following you have to consider here. Least is 25,830. So, when you deduct this 25,830 from amount received on encashment, you get taxable earned leave as 1,470 rupees. It is it is Mr. Narayan's taxable earned leave. His exempted amount of earned leave is 25,830. 25,830, that is exempted amount, it is taxable amount. In the problem they asked you to calculate this amount, but for your understanding we calculated whole problem, that is taxable earned leave. Okay, this is the problem. Let us solve one more problem. See this one. Ganesh retired from service on 31st March 2020 after serving 27 years and 6 months. He had 9 months earned leave to his credit. His last drawn salary was 22,500 and DA at 30% of his basic. The increment of 1,000 rupees fall due on 1st September every year. He received rupees 6,50,000 on leave encashment and commuted 3/4 of his pension and received 3,30,000. Find out taxable leave encashment and taxable commuted pension. This problem is asked in the examination for 4 marks. Okay, let us solve this problem. See the problem once again. Ganesh retired from service on 31st March 2020 after serving for how many years? 27 years 6 months. Here you should ignore the fraction of years and you should consider only full years of service, that is 27 years. But in this problem no need to consider this one because you are not calculating a gratuity here, so it is of no use in this problem. Under gratuity, if he is not covered under payment of gratuity act, you should consider 27 years, and if he is covered under payment of gratuity act, you have to consider it as 27 years only, because it is not more than 6 months, it is just 6 months. Okay. Next, he had 9 months earned leave to his credit, that is the approved period of leave encashment, that is 9 months. Note down this point, 9 months approved period of leave to his credit. His last drawn salary was 22,500 and DA 30% of his basic. In this problem, nowhere it is mentioned that DA, that is dearness allowance, is to be considered as retirement benefit. That is why you should ignore DA while calculating his 10 months average salary. Why? Because in the problem they did not mention that it is retirement benefit. Only if they mention it as retirement benefit, then only you can consider DA. In this problem, you should ignore DA. The increment of 1000 rupees fall due on 1st September every year. Here it is his last drawn. He retired on 31st March 2020 and he got increment in the month of September. So from September to March there is increment. That means this 22,500 is inclusion of increment. That is September, October, November, December, January, February and March. For 7 months you have to consider 22,500 as with increment salary, and for remaining 3 months you should consider only 21,500, that is without increment salary. Remember that point. And he received 6,50,000 on leave encashment. Actual leave encashment received is 6,50,000. From this you have to deduct list of 4 things and commuted 3/4 of his pension. Here he is not commuting full pension, only 3/4 he is commuting, and received 3,30,000. For the purpose of calculation of taxable commuted pension, you should consider full pension. That is, from amount received you have to deduct 1/2 of his full value of commuted pension. Here you are considering 1/2 because here about gratuity nothing is mentioned. So you have to consider him as not in receipt of gratuity and you should consider only half of his commuted pension, that is full value of commuted pension. In this problem, if they mention it as in receipt of gratuity, you should consider 1/3 of commuted pension. That you already learned under commutation of pension. Okay, please refer that notes once again and find out taxable leave encashment and taxable commuted pension. See the calculation. Calculation of 10 months average salary. Salary without increment for 3 months, as I told you earlier, that is for August, July and June. 21,500 for 3 months, that amounts to 64,500, and salary with increment 22,500 into 7, 1,57,500. Total 10 months salary amounts to rupees 2,22,000. You have to consider 10 months average salary, that amounts to 22,200. Okay, because it is 10 months salary, when you divide it by 10 you get the average monthly salary. Computation of taxable leave encashment is as follows. Actual amount received on encashment 6,50,000. From this you have to deduct least of the following things, that is actual amount of leave encashment received 6,50,000. 10 months salary already calculated 2,22,000. Amount of salary for approved period of leave, that is 2,22,000 divided by 10, that amounts to rupees 22,200 multiplied by 9, that amounts to rupees 1,99,800. This 9 months is his leave credited to his account, and statutory limit is 3 lakh. Whichever is less you have to consider here. 1,99,800 is his exempted leave encashment because it is less. When you deduct this 1,99,800 exempted leave encashment from 6,50,000, you get taxable earned leave as 4,50,200 rupees. It is his taxable earned leave. Okay. Next you have to calculate commuted pension. Here you have to consider, or you have to assume him as not in receipt of gratuity. That is why you have to consider half of his full value of commuted pension for exemption. That is, commuted pension received 3,30,000, from that you have to deduct exempt under section 10 subsection A, half of full value of commuted pension. Here you have to calculate the full value of commuted pension, that is his commuted pension received, that is 3/4 is 3,30,000. Cross multiplication you have to do, that is 3,30,300 into 4 divided by 3. You get the full amount of that half, that amounts to rupees 2,20,000, that is 4,40,000 into half. 2,20,000 is exempted commuted pension. When you deduct this from commuted pension received, you get taxable commuted pension as 1,10,000 rupees. We already solved this problem. Please go through that notes once again. Okay. This is about the problems relating to leave encashment and commuted pension. Very important for your exam. They will definitely ask one problem relating to this in your final exam. Thank you. Let us solve some problems in the next session.